Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k.
Welcome to the Daily Cash Flow. My name's George Robson.
My name's George Robson.
They're going to steal my identity? Is that how this
I've been wanting to flip with you for a while. I want to be on that side of the camera.
Sounds good. This is our special episode. That's how we're going to go. What'd you have for breakfast today? I always ask you that. I'm always interested.
I had Oatly yogurt with some granola.
Wonderful.
I'm trying not to eat so much dairy, so I have some oat milk yogurt. It's pretty good.
Yeah, I like oat. It feels good. Yeah. How's business? Are things like...
How's business? Business is, I have to say, pretty good.
Okay.
Here we are in the middle of August, coming into Labor Day. Always a bummer of a time in our area because it signifies the end of summer coming up.
Has demand changed as a result of that kind of season? Or
Well, our business isn't seasonal. I was really just talking about sort of spiritually. We love summers here. We're at the beach, we're at the shore. It's just a fun, happy place. We're outdoors. We're in bathing suits and flip-flops every day, and that kind of thing. So it's very low key for us around here all summer long. We have a local summer here where when we come into the post-Labor Day time period and probably through October, we call it local summer, where sort of the visitors tend to retreat back to their homes and resume life, although obviously this year we'll see what happens. It's not a normal year. And the local people in the community get to reclaim their beaches with less crowds, and they get to reclaim the community with less congestion, and we can get parking spaces, and we can walk our dogs on the beach without having a billion people there to maneuver around and that kind of thing. So it's a bittersweet time of year, probably. Summer's coming to an end, but we get to have our local summer, two sides to that coin. But business is generally pretty good because we've been longing and waiting for the summer to have occurred here. I mean, we had a scary year, and we didn't really know where business was taking us through the summer, but around here we've been able to have a semblance of some sort of a summer, which I think has been helpful. There's obviously a lot of people still feeling a lot of pain, and businesses feeling a lot of pain, George, but business for us has been very stable, if not strong. I think what we've seen is that the exodus out of the cities nearby us, so we have Philly and New York near us, people are leaving the cities. There was an article out in the New York Times yesterday about how New York City has the most vacancies on record it's had in decades, with 67,000 apartments that are vacant and available on the market. I mean, that's a big number, big number. And without new waves of young people, students, families, whatever, moving into the city to absorb the housing supply, the vacancy rates are going to translate into big problems for the property owners in the central cities and the urban areas. It's going to be price pressure, so rents are going to come down. They're going to have to give a lot away to get someone into their apartments, concession-wise, free rent-wise. They're probably going to have to pay the broker fees, which are very expensive, which the brokers are the ones that feed a lot of the property owners and apartment building owners the applications. So they have to get paid, and all of that's going to get paid for by the property owner now. Whereas before the pendulum swung this way, we saw that the applicant and the tenant was paying for all of these things. In our market, we've had a lot of absorption, again, capitalizing on the exodus out of the cities into open spaces, coastal spaces, recreational spaces, places where people can both live and play and be outdoors, and being outdoors is obviously important right now. So we've seen a lot of absorption in inventory. Vacancy rates are way down. Occupancy rates are way up. So In that regard, business has been pretty good. We've seen fewer people move out in favor of purchasing a home. I think that obviously the suburban markets, not just in our area, George, but everywhere, have experienced a real uptick in popularity because people just wanted to get out and have a backyard and have space and have a house with some square footage that was larger than their small apartment in a city.
And with interest rates low, it's a good time.
Yeah, so interest rates are historically very low right now, but the lender requirements were tightened a little bit. And you also see a lot of supply getting snapped up. So like in our apartment buildings, we have low vacancy rates. In the housing markets, there's low availability of inventory and supply. If you want to buy a home, there's just not that much great stuff that's out there. It gets snapped up pretty quickly. I think people are finding that everywhere. But the prices are going up accordingly, so that creates a larger barrier to entry. The lending requirements have tightened. That's a barrier to entry. The builders are feeling their materials and costs of goods having increased. For example, lumber recently has doubled in price between like April and now. So a lot of this new construction is now more expensive than what they even thought they were going to put it out for because their materials costs have gone up. So the low interest rates are definitely impacting the home buying market, but there's other factors at play. And for us, that means in our apartment buildings, we're experiencing less turnover for people that would otherwise have gone out to buy a home. Usually people stay with us 3, 4, 5, 6 years, then go and buy a home. And we're finding that so far this year, a lot of the people have chosen to remain renting for longer than they would have otherwise have thought.
And probably because there's certainty there, in this time.
There is certainty there.
It's like,
sure.
It's a secure place. You have a good management, good property management. So
yeah.
It's like,
I mean, without income and without a job or with a reduced job or with in-between jobs or whatever this pandemic has meant for everybody individually, I think it's probably a tough decision for many people in a tough spot to justify going out and buying a home now. Even though rates are low, the prices are up and the supply is very constrained. So people are choosing to remain renting for a while, which I don't blame them.
Yeah, that makes sense. I wanted to touch base with you on real estate investment trusts. It's something that we touched on a little bit here and there, but I wondered if you could just clarify what that means for an investor, what we need to understand about that as investors.
So a real estate investment trust or a REIT is a publicly traded share that you can purchase as an investor. It trades on the stock exchanges, and you have access to them through your trading account online, same as you do with any other share of stock. And a REIT purchases commercial income producing real estate of all different types: office, retail, apartment, residential, warehouse, industrial, right? It owns it, it contracts out management, and the profits from managing that real estate go into the REIT, and income is distributed to the REIT shareholders. And the value of the share of the REITs will fluctuate and change more often than not based on what's happening in the marketplace compared to the micro issues that drive property management and profitability at the property level. So when you buy into a REIT or buy shares of a REIT, you don't own real estate. You own shares of a company that own real estate. And that company is a publicly traded company, and it has certain restrictions, certain requirements, and certain considerations and guidelines that it has to operate under. So for example, REITs have to be in the financing markets all the time. They are a big driver of the real estate and banking finance markets. They have to distribute the income that the property generates to the shareholders. They can't elect to hold on to cash that's generated from the real estate that the REIT owns and distribute it at a later time or reserve it for some other purpose. They have to distribute it. So there's those considerations that REITs have to abide by and operate under. And like a stock, the price of a share of a REIT will fluctuate up and down depending on what's happening in the world economic markets on that particular trading day. So you could have a perfectly healthy property that the REIT owns, and the shares of the REIT will go down, they'll go up, they'll swing and move, and it has nothing to do with what's happening at the property level. And when you own a share of a REIT, you get the income. You don't get capital appreciation, depreciation, the tax benefits, the forced appreciation, all the things that you can get when you actually own title or when you own real estate itself. You don't get that stuff. You own a share of stock, and your ownership of that share is subject to market fluctuations, just like it would be with owning any share of stock. So those are key considerations if you're thinking about buying shares of a REIT. I've never owned any REIT shares because I always wanted to directly own the real estate. It was just a far more clear distinction to make between owning shares of a stock or a REIT or owning the real estate itself. So when you own the real estate, you have all of the tax benefits, the income tax sheltering, the mortgage interest tax deductions, the depreciation, the amortization, capital appreciation, which can occur from rent growth. It can occur from forced appreciation. If I renovate properties, if I do capital improvements to add certain services or amenities, I can force appreciation of the property that way. And I have far more control over owning the real estate itself than I do if I own a share of a REIT, again, which is just a stock. So I have no control with a REIT. I have so much control in owning the real estate itself. And I'm in the capital and finance markets all the time with my properties. So I'm constantly financing, refinancing. I'm constantly in the banking and mortgage debt markets. We're constantly looking at interest rates, loan terms, debt service coverage ratios, things like that, which lenders will put into loan term sheets. We're constantly reviewing that stuff because we will, at certain times, choose to pay off an existing mortgage in favor for a new one under more favorable terms, lower prices, longer amortization periods. So all of that stuff affects the cash flow. I can control that. If I own a share of a REIT, I have no control over that stuff, and I just hope and pray that the people that manage and run the affairs of the REIT are doing the right job. So it's a very clear distinction to make between owning a REIT and owning the real estate itself. George, I own real estate. I don't own stocks and I don't own REITs. I own the real estate because I want to come in and I want to make an impact every day when I come into my office on things that happen at the property level, because what happens at the property level drives what happens at the ownership level.
Yeah. And as far as how that affects your potential investors and people that are considering Siegel Capital or groups similar to that, how does that compare? And
Well, if you want to buy into a REIT, you don't need Siegel Capital. Right. Go into your online trading account or call up your broker, research REITs, and buy into some REITs, and you'll own shares of a REIT. You don't need me or anybody else for that.
You just need to be able to. Else like that.
Yeah, you just need to be able to transact and buy the share. But if you want to own real estate, you need to have access to owning real estate. Now, you can either go out and buy a big apartment building yourself. If it's not your primary business, you're going to be faced with a lot of challenges to do that, but certainly it's possible. Or you need to have someone who's in the business of purchasing, acquiring, and managing investment real estate to invite you in to invest with them. So that's what we do, and it's completely different than a REIT. And if you want to own the real estate, you need someone like Siegel Capital or your Uncle Jimmy or whoever you have in your life that's buying and managing apartment buildings or income producing real estate. You need that person, because otherwise there's just no real access to the normal accredited investor to be able to just buy into an apartment building deal. But with us, of course, that's what we do, so that's what we offer to the accredited investor public. They're two completely different situations. I mean, it's apples and oranges. So George, in my opinion, the way you build generational wealth is you own income producing real estate for the long term. Real estate has outperformed so many other asset classes over time. It's performing well in low and high interest rate environments. It performs well in times of a crisis. We've talked about that. When the economy's strong, residential, commercial real estate performs well. When the economy weakens, it tends to perform well also. So what you're doing is you're creating a consistent, predictable, long-term stream of cash flow through your ownership of real estate. REITs aren't that. So they're completely different investments. You may as well ask me, what's the difference between investing with Siegel Capital and buying a bushel of oranges in Florida? I mean, it's really that
Hey,
different.
Peter, what's the difference between investing with Siegel Capital and buying a bushel of oranges?
Well, good question. I mean, bushel of oranges in Florida do not have consistent, predictable long-term cash flow.
No tax benefits either.
Right.
Yeah.
They certainly taste good if you pick them on the right day.
Hell yeah. There's this quote that you've mentioned before, and I think I read in something you wrote a little while ago. It's by Chesterton. The true soldier fights not because he hates what is in front of him, but because he loves what is behind him. What makes that quote important to you?
I mean, I think a few things, because it's beautiful and poetic to me, and it evokes this sort of old school way of thinking from the mid-1900s. I'm not a hateful guy, and I'm not a violent guy, or I'm not looking to fight physical fights, so I don't appreciate the quote because it's telling me to hate the person or the thing in front of me. That sounds like what terrorists do. But to me, what I think about when I hear that quote is I think about all of the things in daily life, business, personal, what have you, that are challenges, obstacles that we have to overcome, things that are important to us and meaningful to us that we want to fight for, to preserve or promote or cultivate. So George, you've heard me talk about how I feel like when I come into work, I'm like coming into the battle, like I'm ready to fight, right? Everything to me is a fight in business. Nothing's easy. You got to fight for it. And I'm in the business that I'm in because of several things. I mean, I have passion for it. I love it. I feel like I'm good at it, but it rewards me with a lot of the things that I'm looking for in my life so that I get to then have the freedom and options and flexibility to do what I want, which is to spend time with friends and family, having fun and enjoying my life. So I think that that's what I fight for. But I certainly don't come into the office looking to fight physical battles, but more the metaphorical ones. And I rush at them. I don't shy away from them. And it makes me think about all the things that are dear and important to me. So I think that's what I think about when I hear that quote. But that's a good quote.
Yeah, finding the right fuel and love burns cleaner.
Love burns cleaner.
Yeah.
Damn, George. Love burns cleaner. Where's that from?
I don't know.
Is that a George Robson
That might
quote?
be a George Robson, yeah.
Okay.
So we'll put that in the quote book.
Love burns cleaner.
Start referencing that in the future.
I don't even know what that means, but...
Well, no, just as finding different fuel, and you can be fueled by hate, and hate can be a motivating force.
Yes.
But in the end, love doesn't pollute the air around you, and you're burning fuel that way. So
I love that. I love you.
Yeah.
I love that quote.
A lot of love in the room, as always.
Yeah.
One of my favorite videos that we've done is the losers react, winners anticipate.
Thank you.
How do you develop anticipation? Do you have any tactics that you use to anticipate things?
I mean, one of the things that I do is I play out all the possible scenarios when faced with a business decision, a question, a problem. I play it all out. If I turn left, what does that decision look like? If I go straight, what does that decision look like? If I go right, what does that decision look like? And as we've talked about, if I stay put and I don't go anywhere, what does that look like? And I play them all out. I flow chart it out. I mean, I'll create a drawing and a flow chart with chicken scratch and notes and diagrams and boxes and circles and X things out. I mean, I play everything out to the ultimate destination. And I spend a lot of time doing that kind of thing. So I think that if people were to engage in that kind of process, a visual process, maybe with some sort of whiteboard or with a large pad, and just literally just draw it out and write it all out, every possible scenario, and start thinking about the nuances of every possible path and every possible scenario, I think that that's going to develop some serious anticipation skills.
Yeah, so actually kind of get it down on paper. And it's funny that when we think about anticipation, I think we often view it as a mental exercise. But here you're saying if we actually kind of put some physical work into it, it'll help.
Play it out, man.
along.
I mean,
Yeah.
think about all those movies that we've all seen, right? Where people are locked inside of a room, 2 a.m, trying to problem solve or whatever their task is. And there's a big board up on the wall, and everyone's drawing at it and crossing stuff out. And or the detective war room, where they've got a bulletin board with the perpetrator's photographs up, and there's strings leading to the photographs, and they're thumbtacked in with different pieces of paper and notes. I mean, they're all anticipating, considering all of the possible outcomes from all of the various combinations of activities. Have a physical manifestation from your mind to paper to whiteboard to the wall, whatever it is. But once you get it out of here and onto something concrete and hard, I think you're going to really get good at developing anticipation skills.
Yeah, I think the writer Neil Gaiman said that a lot of people think of writing as a way to get your thoughts down on paper, but that for him, it's actually to actually think. That the writing itself helps him think, and it's not like a perfect idea that you have and then place down. It's actually that process that clears.
It can also help you change your behavior. So if you feel like you need to force something to change within you, getting it out, creating a physical manifestation of it, will definitely help the behavior start to change.
So last week, we touched on entrepreneurship. One of the listeners' questions was concerning that. And you had mentioned that entrepreneurship is something that comes from the inside. On a day-to-day basis, what does that look like for you?
Look, if you want to be an entrepreneur, you got to be good at a lot of different stuff, right? We've talked about specialization versus generalist.
Yep.
So for me, I have to be good at so many different things. And as an entrepreneur, you're going to have multiple businesses. You're going to have your core business. You're going to have income streams that are vertical to your core business, horizontal to your core business, that have nothing to do with your core business, right? You're going to be involved in all this stuff. You're going to have your core business, but you're going to have so many other things happening, and that's what it means to be an entrepreneur. You have a lot of shit going on, and you're good at a lot of stuff. I own apartment buildings. I own real estate. I own a construction management business. I own a property management business. I will, for fun, buy distressed single-family homes or condos in certain areas that I have some knowledge about the market in those areas, and I'll renovate them, and I'll flip out of them. I do it for fun. I don't do that for an investment. I don't recommend that for investing. But I enjoy the creativity and the development of something that needs a solution, providing that solution. I renovate it, I design it, and then it has an end game, and maybe I break even or make $1 or $2 at it. I buy and sell certain kinds of fine art that I have a passion for and that I love, and I do that with a degree of success. So I make money when I do that. So I have all these different income streams happening, but I have my core business, and that's where my focus is, and these other things most of the time support my core business. Sometimes they don't support the core business, they just happen because I have a passion for them. For me, being an entrepreneur is having a lot of stuff going on at once and being able to manage all of it, and being able to manage all of it successfully. And I do that because I have a very broad skill set. I'm good at a lot of things. I'm not a specialist in one area. I think that people are going to find, if entrepreneurship is the path for them, that they're going to find a similar thing for themselves when they get into it. They're going to have a lot of stuff going on, and they're going to have to be good at a lot of different things.
It feels like the jack of all trades, master of none thing is becoming more and more a thing where that's actually the mastery.
Hey, you eat what you kill.
Right.
We're in a pandemic. A lot of people have lost their jobs. A lot of people have lost their businesses, their small businesses. They have to reinvent, they have to pivot, and they're going to do that in a way that their skill sets allow them to. They're going to have to be agile and move fast. I mean, what is a natural way to pivot and move? You're going to have to rely on your existing skill set base. Yes, develop some new skill sets, but right now, if you eat what you kill and you don't have income coming in, you're thinking of ways to get income now. The entrepreneur who's able to execute will find those ways, and they're going to use their existing skill set to be the launching pad.
So you mentioned your core business is obviously always your main focus.
Yeah.
And something we've talked about before is the lease. Your lease document is this awesome lease document, very strong. What are 1, 2, 3 things that property managers could learn from your lease document?
I love that question. I'm very proud of my lease document. It's a result of my almost 30 years in the business. It's evolved, it's grown, it's changed as the times have changed. So there's definitely some things about my lease document that I want to share with everybody out there. If you're a property manager or if you're a real estate investor yourself and you own apartment buildings. So the first thing is, in your lease document, you need to specify a definition for wear and tear. What constitutes wear and tear? I recommend to add specific language for high-ticket items such as flooring, appliances, countertops. I mean, today we're seeing granite or quartz countertops as a standard feature in a lot of mid-price product and higher. So what happens if someone cracks the countertop? I mean, it's a $3,000 replacement. So have your lease document specify that damage to the countertops, flooring, and appliances, again, these big ticket items, are not considered normal wear and tear. Number 2, list the number of occupants permitted in the apartment and list them by name. And at the end of that phrase where you're listing the number and the name of the occupants, include the words "and no others." So why do you want to do that? People will move in, they'll move out, relationships will form, relationships will break up, boyfriends, girlfriends, brothers, sisters, aunts, uncles, cousins are going to come and go out of an apartment. This is your real estate. This is your apartment. You're leasing it to the tenant. So you want to maintain as much control over who comes and goes as possible. Now, when this tenant applied, they gave you their income. You ran their credit. You did their background check. But you didn't do a background check or get the credit and FICO score and income verification for their second girlfriend down the line 8 months from now. So the phrase "and no others" is going to protect you as a property owner or property manager from someone taking advantage of having the possession of your real estate. Number 3, the notice of intent to surrender. So this is a big one. You want to require the tenant to give you their notice of intent to surrender 30 days in advance of the next billing period. Not 30 days, because people will give you a 30-day notice on the 12th of the month. Well, 30 days from the 12th is the 11th of the following month. It doesn't really work because now you're mid-month, you're mid-billing period. So what you want to do is get the notice from the tenant on the 30th of the month so that by the 30th of the next month, you can then start scheduling the move-out inspection and get the keys. And you've got a property that's vacant on a billing period. Otherwise, you're going to run into all sorts of prorating issues. You're going to run into charging and charge-up issues with tenant and rent. It's going to be too complicated. And if you have a lot of buildings or multiple units, you're going to want to get your hands around this issue. Number 4, this is huge. Have a provision in your lease that requires and or encourages tenants to take out renter's insurance. So inevitably what will happen, George, is there will be a rainstorm. There will be a leak. Things happen. And the leak will happen on the tenant's beautiful computer or their grandmother's couch that they gave them that's very special to them. And you will get a phone call as the property owner the next day that you, the property owner, owe them $5,000 because the computer got leaked on and doesn't work anymore. Or you, the property owner, owes them $20,000 because grandma's heirloom couch got destroyed in the rainstorm where there was a little bit of a leak that came through the window or the roof. So, look, inevitably things are going to happen in business and life, right? We have here a landlord-tenant relationship. It's governed by the lease document. Put in the lease document that you encourage the tenant to get tenant's insurance. And also have a disclaimer that the landlord is not responsible for any damage that should happen to the tenant's personal belongings. And once it's in the lease, it's in the lease. If it's not in the lease, you can't claim it, and you're open to risk. So make sure you include these things in the lease. In my areas of New York and New Jersey, where I operate, the lease is the Bible. So the first thing that's going to happen in the event of a dispute, a judge is going to look at the lease. If it's in the lease, you're protected. If it's not in the lease, there's an opening. Put it in the lease.
Anything else you want to discuss before we move on to Zest Quests?
Anything else that I want to discuss?
Yeah, is there anything else rattling around in that brain that you feel
Anything else that I want to discuss? Well, I am one of those people that is feeling a little bit bittersweet right now because we're in the second half of August and summer is approaching that key Labor Day moment, and I'm a little bummed. I mean, I love my summers. I love summers at the Jersey Shore. This area, it's a happy, beautiful place. And I want summers to be lasting forever. And so.
Yeah, they just seem to go by faster every year.
They do. And this year was obviously a little nuts.
Yeah.
I hope and pray for the small businesses that had a tough time before summer, that were able to somehow generate some business during the summer. I hope that they're able to find ways to continue to generate business when summer's over. And I hope that people find a safe and appropriate way to get kids back to school. I think that's going to be a tough thing for a lot of families, George, is now the parents have to work and they have to be daycare for their kids and they have to be school teachers for their kids. And it's really going to be taxing and stressful for so many of these families.
It's a big challenge.
Yeah. And I hope we get through that smoothly and really fast. This year's been stressful and problematic enough for so many people. We don't need more. And this is coming up. This is knocking on our door. We're talking a couple of weeks, and then parents have to figure out how and if to go back to work or deal with their kids. So thinking about all the parents out there, including myself. And George, maybe that means you see me a little less because I have to be daddy daycare. Yeah. Which I'll do, That's
maybe you can start filming that process. That'll be part of our content.
Oh, you
creation.
want to come down to my house and film me with?
You can have an English lesson, history lesson from Peter Siegel.
Yeah. I promise you that none of our readers, whoever they may be, want English or history lessons from me.
Yeah.
But,
sounds good.
Yeah.
All right. Well, we'll move on to Zest Quests. This is a classic question.
A classic.
But I still love it.
Okay.
If you were going to have dinner with anyone throughout history, who would you have dinner with?
I already know the answer. My father. I miss him, I love him, and I wish he was here to have more dinners and all sorts of other moments with. So for me, for sure, it would be my dad. You've heard me speak about how I've learned so much from him, and he was such a mentor for me and gave me so much. And up until his 86 and a half year, he was really relevant and giving me a lot of insight and a lot of knowledge, and I was learning so much from him, and I miss that. So for sure, I would stop everything to have dinner with him one more time.
That's awesome. And last question for today: who was your favorite teacher and why?
My favorite teacher. A few of them come to mind. I had Miss Falsetta in the 4th grade, and she encouraged me to be in a talent show in front of the class, and I was just learning how to play an instrument, and I got up in front of everybody, and I sucked, and I played anyway, and I sang too. I sang and I played, and in 4th grade, I guess it was unheard of, because I remember the next kid was just doing a drum thing with a snare drum hanging on his neck, and there was nothing more than that, and people loved it. My classmates freaked out, and my teacher wrote me this nice note that she thought it was great that I sang a song and played guitar,
and Bob Dylan.
Gave me a lot of confidence. At 4th grade, she gave me a lot of confidence and pushed me to do that, and I had a really positive result from that. I remember I had this teacher in college, this guy, Mr. Jackson, and he was a pop culture teacher, and so we had to do these really interesting and wild experiments, and one time he took the whole class out to a Red Hot Chili Peppers concert. This is down in Washington, D.C. in 1989, right? So the Chili Peppers were not really the pop sensation that they later came to be. They were still really just a funk band, but he felt it was important enough for us to be exposed to this breaking new music, and he took 30 people to this small, tiny venue, and we saw the Red Hot Chili Peppers. The band came out in their what then came to be their signature look, which was they were butt naked with socks hanging on their penises, and we were like, "Whoa, this is nuts!" And they busted into the show, and it was super high energy and super high voltage, and the teacher was just going nuts. I mean, he was dancing, he was standing and dancing and doing this really weird dance, and he looked like a freak, but it was really fun. And look, teachers don't have to do that kind of thing. He felt that was the right example to give us a takeaway and a message, and it was great. I'll never forget it. So that was a great moment. Thank you, Mr. Jackson. Plenty of great. I had this one great international business teacher, Frank Du Bois, and Frank is a crazy guy, smart guy, and just a great teacher, and so many great memories of him teaching us business in college. There's many, so yeah. There you go. There's 3 for you, George.
Yeah. No, that's awesome.
George.
No, I love, well, especially because we, most of this is educational, that we try to be entertaining and educational, that, teachers play such a large role in our lives.
Yeah, I think people find me more entertaining than educational.
Yeah.
We'll see. We'll get the listener comments this week.
You'll see somebody come in and say, the teacher that means the most to me is Peter Siegel.
Yeah. Not yet. We'll see.
But one day.
Yeah.
All right. Thank you. I appreciate your time, and I'll see you next week.
Thank you, Peter.
Thank you, George.
All right.
If you like what you just heard, you can subscribe to The Daily Cash Flow on iTunes or wherever you listen to podcasts. And we'd love it if you left us a review. You can follow us on Twitter and Facebook at SiegelCap and on Instagram at Siegel.cap. As always, if you're an accredited investor, go to SiegelCapital.com and take our survey to see if you qualify to take part in one of our apartment building deals. That's SIEGEL Capital.com.